When I say we have, you say hopium. We have. Better have said it. You can't watch the rest of this. This is the hopium video. So, new viewers, this channel is typically not some permapoll or always, telling folks to buy stuff at the tops. Rather, I'm quite the opposite. What this channel does for new folks, folks new to crypto, is it addresses the two major issues, biggest problems that you're doing that are holding you back from a successful and profitable crypto journey. Is first, when you click buy with your money, you have no idea whether that's a good time to buy. So my channel helps you address that. And number two, the second biggest mistake, or perhaps the first biggest mistake you're doing, is you're not selling. You probably have never sold anything, and you did. Price probably went up right afterward, and you sold at a bottom after taking the big loss. So I teach you how to take profits like a boss and become a profit pimp from being a buyer and prayer. So I help you out with that conversion. So my content is often best watched on ×2 speed, so feel free to catch up on previous videos and my library videos that teach you, trading jargon. What's a 4 hour 21 EMA, stuff like that. It's all free, and it's in a playlist as well called Trading Journal or Library. It's library. So with that said, if you like what you see by the end of the video, new viewers, and you happen to subscribe, try to remember hit the thumbs up, and returning viewers, try to hit the thumbs up to help out the algo during lackluster interest in crypto, as things aren't green and happy and getting everybody rich real fast. That would help me out quite a bit. But new viewers, if you do subscribe, let me know whether you want to be a cryptillion or a crypto crackhead. Those are the gender neutral crypto pronouns that this community holds, whether it's YouTube, Patreon, whatever. So we will go from there. So turn it up to ×2 speed and get ready for initiation of timification. We have hopium. All right, I got some hopium for you today, and it's actually in the charts. So this is not based off of fundamental news like Bitcoin becoming legal tender in El Salvador and potentially a couple of other Latin American countries or anything like that. It's not based off Taproot, where BTC transactions are potentially going to be private and or cheaper, and so it's not based off that. Although that helps. Those fundamentals are going to help what I'm about ready to say, and those things actually might be making what I'm seeing in the charts. But then again, I typically don't follow news because I can see it in the charts, right? Or at least what matters about the news is how it affects price, and I can see it in the charts. So I'm going to show you what I'm seeing in the charts. It's suggesting that this 30K downturn might have been it. Could have been it. And let me show you why. There are a couple reasons why. One is on the monthly chart. So if you want to go to Bitstamp, so if you type in BTC on TradingView USD and choose the Bitstamp one, that's the chart I'm using. It has the most price history, and I clicked M for month, and that's what we're staring at. And then I have the 10 EMA on, which is this right here, the 10. So I have that one clicked. All right. I'm going to use the 10 EMA for both the month and the weekly. So here's what I'm saying. There are not many data points for the month on Bitcoin because it's a younger asset. So 10, 12 years, whatever. 12 years monthly. There aren't a lot of monthly candles, or even, cycles seen with monthly candles. However, there is a perfect ratio of something that I'm saying, and the ratio, the case or the example that Bitcoin is following right now on a monthly chart relative to its monthly 10 EMA or moving average, exponential moving average, it is the recovery case, not the bear market case. So here's what we got. Let me zoom in on current price. Anytime throughout history that Bitcoin fully pierces its monthly 10, okay, so this wick here means price went significantly under it. The monthly 10 is this red line here. It's a moving average, exponential moving average. Anytime it fully pierces its monthly 10, if there's going to be a continued downtrend, the next candle closes below the 10 every single time. And in the only time that Bitcoin went fully below its monthly 10 and recovered it didn't close candles below the monthly 10. The next candle was green. And the candle that went below only wicked. It actually closed above, and the next one started above and continued to stay green and didn't go back down. So specifically to this red line, if price fully breaks it, the next candle will either be red and below the red line, or in a recovery sense, it will be green and then price ends up recovering. Okay, so let's go back. So the first approach of this, it tested it. You got it. So a test of it is not what I'm looking at. A full breakage of the monthly 10 here on that wick. The next candle closed below and was a massive red candle. And then that led to a further downturn. Go to the next case. Bitcoin fully broke. So this was if I zoom out, this was the height of 2017 before the 2018 bear. So this was So this was the 20K top of 2017, and this was the 2018 bear market. It fully broke the monthly 10. The next candle was not only a big red candle, but it closed below the 10. And I had got made fun of by more experienced traders with, or even less experienced traders, about, something simple with the monthly. I called the idea that the chance of this candle being green is like almost zero because it's never happened. You don't get 7 in a row. It just doesn't happen in Bitcoin. It hasn't happened. It probably won't happen. Going with the major, like the macro trend, and I got made fun of. But so just so you know, something as simple as what I'm doing, I know what it might seem like. It's too simple, but really it's the simple things that honestly, as long as the back testing of it works, the likelihood of it continue working and trading off of it is going to be a very statistical probable trade. Even though you can't make like necessarily a single trade off of the monthly candle per se, it's kind of hard to do that. But unless you catch like the test of the monthly 10, that might be one. But anyway, so the next example here, this is 2013. If I can zoom out, so this was the height of 2013. This was the bear market of 2014, 2015. The first time that Bitcoin price fully pierced the monthly 10 EMA right here. The next candle not only was red, but it closed below. It closed below, and then a downtrend continued. Okay. So I'm going to label this one a test of the 10. Here it fully broke the 10 in the crash during a bull run, and then it recovered and continued its bull run. Although it took like 200 days, but it fully broke it. The next candle was green. That's the one time it recovered and continued an extremely aggressive bull market. It went sideways for quite some time though. Try to zoom in just a tiny bit on the week and see how many more days that was. So from top to consolidating under highs was 182 days. So from a top to when we might start testing consolidating under highs could be October. Because it's on a monthly scale, it's following that one pattern, and it's not following all the other patterns, of which there are more reiterations or, examples of it happening, like sample size, right? So it's also interesting. I didn't plan this one out quite as well, but I have done it. Let's see here. Where did I? Oh, I have to go to the monthly. Sorry. So going back to the monthly, oddly enough, about that October testing new highs is the idea that if I go from high to when Bitcoin was flirting but closing above the monthly 10, picked the wrong one. High to finally closing and flirting with the monthly 10, and I take that fractal and I move it, somewhere around here. The testing or consolidating under these highs happens here, and that's in November. Roughly the same time frame that happened in 2013. Now, will it just be flat and straight across and boring as it was here? That could happen. However, I have and that is one, as I said in my last video, I believe this choppy sideways stuff before a recovery, that is among the 3 most probables. I really hope that's not the one that plays out. But, because it's the least fun, I would rather it crash down to 22K and be holding tether then and get stuff at killer deals before a nice run. You make a lot more money. But anyway, but oddly enough, just what Bitcoin recently did here, closing above the monthly 10, that would take roughly the same time frame as that one reiteration of when Bitcoin went below the monthly 10 but didn't close below on the next candle or any candle. So it's just a slightly more evidence that recovery could be more probable than a bull trap, that a bull trap perhaps up to like 49K, 48K, that leads to lower prices. Could there be a bull trap, even in this case, that leads back down to 39K or something like that? Absolutely. But that would still be within this example here. That would still be sideways and choppy. So you could still have a bull trap, but specifically, I think there's slightly more evidence on the table right now that there will not be a new low below 30K. Even though there still might be a bull trap that takes stuff, it goes from 48 to 38K, something like that. That would still be a legit bull trap, but it wouldn't take things to new lows, and it would just mean a consolidation sideways market for a while. Similar to what happened in 2013. However, what could happen is once you start breaking, those, before you start breaking those highs, you have a scare down, and then it screams up. So if you want to zoom in, so I'm going to zoom in on this. This is 2013, that crash during the bull market. So in the time that it was essentially consolidating under, it had a huge down move up before then it broke this this horizontal there on the monthly. And if you want to see what that looks like, let's go to the 2-day chart so you can see more of the chaos within. How many times do I have to do that every video? Look at this. So this is something that could happen to try to scare people out right before a big run, which honestly, with institutions in it, it's pretty likely to happen. So just heads up. But if you start seeing Bitcoin consolidate, up at a higher posturing, maybe not at all-time highs, but somewhere, kind of closer, there's a strong chance they have a scare down in like a $10,000 down day. It comes right back up, consolidates, then takes off. I honestly foresee something like that happening, but just watch out for this. But this is the kind of stuff I think we'll start seeing happening in December or maybe November, and then start seeing something like this right here in December, January. I think this is October land, where we're consolidating in the high 40s, low 50s, and then consolidating for a few weeks right under 60K before we break it. Okay, but anyway, I'm kind of getting off track here. So I need to go to the weekly now to provide evidence that a new low might be a little less likely than what I was thinking earlier. Even though I still think it might be a top 3 most probable, I think the evidence is showing it's the least likely among the 3 most probable situations, which I covered in detail on my previous YouTube video. All right, so the weekly 10. So now I'm on the weekly chart on Bitstamp. Let me get rid of that fractal. Let me get rid of some of these lines here. I'll keep that line. Okay, so I want to keep those 2 lines. Those are 2 really important lines. In case you want me to tell you what these lines up here are, is whenever Bitcoin, I don't know which line it'll be, but when Bitcoin closes a week and starts a new week above one of those 2 lines, that's when the next candle is going to be a massive green candle. I don't know which line it'll be, it could close above here, get a rejection, and come back all the way down to 50, then try it again, and then close above that line, and then have a massive green candle. And honestly, that could be similar to what happened in 2013. That's when you get the big scare off, and then it comes back up. But it's going to be one of those two lines is kind of key for Bitcoin closing a weekly candle above them before you know price is going to start screaming again. And then YouTube views will start increasing and people will be more interested in crypto again. Even though you should be interested in it when it's on sale. All right, anyway, so the weekly candles, what I'm seeing is the posturing and the approach. So if you've ever golfed, it's like the approach to the green, right? So it's almost like chipping something nice and soft to the green so it doesn't go past the hole, essentially. A nice soft approach. Or if you're trying to approach a dog that you don't know, you don't want to run up and pet the dang dog, especially if it's not with its owner. You want to have a nice soft approach to that dog so you don't scare him, right? Because you could have a bad reaction if you go up to that. So let's call this red line the weekly 10. Let's say that's the dog. If we approach and scream past it, right? Approach it fast and go past, that actually could lead to a pretty big bull trap. So what I'm seeing here is the approach to the 10 currently, it looks more, in the posturing of it, it looks a little more like a recovery approach as opposed to all the times Bitcoin went above its weekly 10, as opposed to all the times Bitcoin went above its weekly 10, failed it, made a lower high, got rejected by the weekly 10 as it came down, and then continued its track down, as opposed to that. So there are times where Bitcoin goes below the weekly 10, goes above, drops back down below, retests it and fails, then continues its journey farther south. Or there are times when Bitcoin drastically goes below the 10, the red line, approaches it nicely like a dog, like the red line's a dog, and then plays with the line. It's a nice dog now because you approached it softly. Now you can play with it and pet it, and then that's what happened. That's what all the recoveries look like. It's like approaching a dog nicely and freaking petting it. I mean, just look. Let's just go back and look. So this, so after this big dump here, it's an approach to it. Even though this candle's pretty big, that was a lot of volatility. But still, it didn't close candles above. It didn't fly past it immediately. It approached it, and as it was here, it was playing with it. And then it got a little rough. But then what did it do? Maybe the dog got a little scared or whatever. Then it started playing nicely again with it, quickly, and then its recovery continued. So you want to play nice and approach softly this red line. Because the times it does it, see, it wasn't even flirting with it here. It was just going sideways. So it wasn't even like, it's like walking past a dog, ignoring it. But once it got close to the dog, it just says, zoom past. And then it kept zooming. But then it led to a huge downturn. So this posturing is kind of like ignoring the dog, which sometimes isn't bad either, but it clearly wasn't approaching it. It was the red line approaching price. It was not price approaching. So this is like the dog approaching a person who's ignoring it. And then as the person sees the dog, like on this candle here, then the person says, hey, puppy, come here. And then, ooh, a bad thing happened. Like something bad happened, right? So this is the dog approaching the person. So here is an example of the person approaching the dog aggressively, and then bad stuff happened. So, and here, the price wasn't under the 10, so it fell under the 10 here. Zooming out, so you can see what year this was. This is 2017 high of 20K. So all of this is 2018 bear market, and this marks 2019. This was January down here, and this was all 2019. You can see here, as it's below the red line, at first, it was a person ignoring it. Like the dog was coming close to the person, and the person saw the dog here. Then the person said, okay, I'm going to start approaching nice and soft. And he said, here, boy. Wait, no, maybe I shouldn't talk that loud. So I wicked back down, right? Okay, we'll try it a little softer this time. So it's like, hey, boy. It's like, oh, that didn't work. So I'll be softer. I'll be softer. I'll be softer. Okay, petting the dog now. Petting the dog now. Good. Good things happen. Bam. I don't know. It's kind of like walking up to a dog. Like, that's what recoveries look like in terms of the candles. And like, this is like somebody who successfully walked up to the dog, but for a quick second scared and realized, wait, I got to do something a little different. Let me approach it a lot more softly. Because here it did actually fly past and came back down. But on the weekly candle, you know, that's the whole story. The wicks just show the battles within the wars, and this shows the result of the war, right? So more focused on the candle. Yeah. So this is a nice soft approach, and then it started petting the dog here. It never just like flew past and started going crazy. So even in all these, so this is the 2018 dead cat bounce before the big drop at the end of 2018 to lead to the 32K price of January 2019 here. That's what we're staring at. So you can see price went way below, immediately came back up, and that's scaring the dog. The dog actually ran away, so the human didn't get close. So the human was farther away, came screaming back up, and then bad things happened, came screaming back up. See that how big that candle is? Like, that's a big aggressive approach. And it never played with the dog. It never petted. It just ran up, maybe took one soft step, then immediately started playing rough with it, and bad things happened. Went down below, decided to go sideways as the dog approached the person, as opposed to the person approaching price. So the dog was approaching the person here, and once the person finally saw the dog on this candle, the person said, hey, there's a dog! And bad things happened. I don't know. I know this is kind of like a childish way to view it, but I mean, it's happened every time. Every time. Now, this bull market was, we're not focused on bull markets. The interaction with the 10 is pretty aggressive. You actually want it to be aggressive so you can continue up. All right, so, I mean, just more. Look, I mean, they went way below the 10, screamed back up, bad things happen. Screamed back up, actually got rejected by the 10, which is what I was saying earlier. And honestly, this could be what happens. We might Bitcoin price in current price could go above, retrace, and then get rejected and continue down to 23K or something. It could easily happen. But it's just the approach right now is not indicating this is what's going to happen. All right. So, I mean, honestly, if there is a bull trap, it would look something like this. This is about the exact thing that would happen versus the weekly 10 EMA. We would go past it, then fail it. But that doesn't happen when you have a soft approach. It hasn't ever happened. Not one time. Okay? And here, the person didn't see the dog going straight sideways, so the dog was approaching the person. On this candle, the person saw the dog and said, hey, there's a dog! And then bad things happened. The person approached the dog too fast on these candles. Dog ran away. So person got farther away. Person got close too fast. Hey, there's a dog again. There's the same dog. I can see him. And then bad things happen. Price went way below the 10. Scream back. Here's the dog. Oh, bad things happen. So, and oddly enough, the time it acted slightly different, even though price came back down, it did not make a lower low. This was the beginning of the end of that bear market. And look how much differently price approached the 10. Look, it did not make another lower low after this. It approached it nice and softly. So didn't see the dog here. The dog's approaching. Then the person saw the dog. Maybe said, here, boy, maybe a little too loud. Said, okay, I'm going to approach the dog a little bit less. Okay, I'm going to play with the dog. Oop, the dog probably doesn't like it. Okay. Here, boy, here, boy. Okay, I'm going to pet him. And petting the dog all this time. Nice, soft approach. And it never made a lower low. All based on the idea that this approach is totally different than all of the other approaches that lead to a lower low and continuing down. It's a stark difference. It's a stark difference. And even when finally, I mean, technically, you know, the end of that bear market, like no one knew at the time that was going to be it, but in retrospect, that's what it was. Even then, approached fairly softly. Like, there aren't big green candles. It never flew right past it. It came right back up and just, hey, the dog liked me. This is like a friendly dog. You just only have to approach it for a little bit, petting it, then the dog like rolls over on its back on that candle. Like, this is like a soft approach to a dog. You get to pet it on that candle, and this candle here is like the dog immediately going, oh, scratch my belly, a dog you don't know. But still, the approach was nice and soft. I don't know. I don't think we're going to make lower lows now. So this is 2013. This is when Bitcoin essentially crashed in the middle of a bull market and recovered, like a monumental recovery, but went sideways for 186 days, similar to how long we might go sideways here. Still, it's still the same. It never just screamed past, like, here, like, start grabbing a dog. It didn't do that. Now, actually, the one time it did, what happened was it continued down. But they never closed a candle, so I'm not counting these. Like, it didn't close candles. So price was below, and it made a nice soft approach. It pet the dog for like a whole month straight. Kind of like, if you've been watching my channel, like my analogy of taking a poop in Starbucks for a month, you might as well take a bed and a cot with you, right? So it's kind of like pooping in Starbucks for 6 months or whatever, but it pet the dog for a month. And then, started petting it, playing with it, and the dog's like, I don't know if I like this, so okay, well, we'll pet you for a little while longer. Now we can start playing with the dog. Like playing frisbee with it, or like wrestling with it, or whatever, So you can't wrestle with the dog until you gain its trust, right? And so price gains the trust of the weekly 10 before buyers step in. And when trust is not gained, in situations like this, there's no trust in it and just flies past. That's when people who were buyers, that's when they immediately become sellers, because there was no trust gained first. Now it looks like it started trying to pet the dog, but because the approach was bad, that the dog wouldn't trust the person, even though the person tried spending a lot of time, petting the dog. It just, in the end, it didn't trust the person. The approach was wrong. So, I don't know. So, it's as you can see, like the differences are stark in their 100% accuracy, with the assumption that my parameters are not too loose and flaky in terms of what's a good approach, what's not a bad approach. So it is possible that my analysis here is slightly faulty because I'm making incorrect assumptions on what is a good approach, and it's possible that I'm just trying to make data so it works. I've been guilty of that before, but leave me a comment down below. Do you think that's what I'm doing here? Like, am I just trying to see what I want to see? Or am I making sense? Like, let me know. Like, please do. Because during times of less crypto interest, leaving a comment, hitting the thumbs up actually does kind of help quite a bit, and for me to continue getting good content both to YouTube and to Patreon, whether you're on one or both or the other, whatever. Just look in retrospect now. Look at this. What does that look like? This looks like one hell of an approach. I bet the dog is going to mildly trust the human. The human's going to pet the dog. And then, I don't know, it looks like we're going to make new highs maybe or like around December. There was one more thing on the monthly, using the monthly 10. Oh, okay, yeah. So another thing I think aligns roughly is, okay, so during this time frame, so this is the monthly, not the weekly. Once Bitcoin was essentially gaining trust of the monthly 10, right? So not in terms of the approach, but gaining trust of it, like not getting too far away from it, resting on it, but still closing above it. Let's measure this time before a candle closed right around, the height of this. So Technically, this candle closed higher than any candle. I'm surprised this month was red, actually. Yeah, given that candle closed above all of that. Oh, because it closed above that too. Huh, in retrospect, I'm actually surprised that was a red candle. That's weird. I probably would have been a buyer there. Interesting. Pretty sure it closed above that. I'm surprised I don't remember seeing this before. Actually, that month closed above it. Oh, it's because this month closed above it, and that month wasn't confident, so it came back down to retest before it had. Okay, that makes sense. So yeah, it's because that candle closed above it, and this candle wasn't confident, so it came back down to test it. Okay, sorry, I'm going off on a tangent there, but that's typically how things work. If you have a lot of consolidation on a weekly or even a daily or a monthly scale, and you have a candle close above the height of the previous candle that created the high, typically you start taking off. But since this candle was a doji, it had to come back down and retest the monthly 10 to gain confidence, and then you had massive green, and then obviously led to like one of the biggest tears in Bitcoin history since 2013. Actually, the biggest in history since 2013. I mean, it was even bigger than this. This was a tear too. That was insane. That was an insane time to be. And then it followed with a year and a half of ridiculously boring stuff. Actually, maybe longer. Yeah, over a year. And that really, this time in Bitcoin kind of sucked. As somebody who, is interested, but it was great for accumulation. So, but anyway, so the monthly 10, when price right here started closing above it, how long did it take? Okay. To essentially start breaking out of the highs. Technically, it broke out of the highs on that month, but this monthly candle closed way above like all these monthly candles. So I'm going to technically call it this month. So October, yeah, so actually it did. It did test the highs there. So October and May. So I'm going to go down to the 2 days so it gives me a more accurate measuring. May. So the beginning of May is right there. And I'll draw my line here. Okay. And then I will measure. So this is where it started closing above the 10, or the monthly 10. That's when you started making new highs. 113 days. So we're technically closing above the 10. So this is a kind of aligning with the idea that October to December might be when we're starting to test all-time highs, if not make all-time highs. Which means there might be a lot of sideways movement. But anyway, so let's pick it about right there. So let's go 113 days. So making new highs around there in January. So those are three different things. So the 2013 example, the fractal of the most recent run up. Okay, fractal. I guess technically I'm just measuring the fractal now, aren't I? But the exact measurement of when it started closing above the monthly, as we're closing above the monthly now, that's saying all-time highs are going to be broken around New Year. And the market's going to get hot as crap. I don't know. I think there's a lot of evidence pointing to that this will end up being that macro low. I like what I'm seeing right now. Now that we have more data on the weekly candle and monthly candles. So what does this mean for you all, though? Without giving away like content that's supposed to be for patrons only, just in general terms, whenever you see a deep retracement in a down direction, okay, if assuming that you're holding tether somewhere at the height of the range, accumulating during those downturns, and perhaps until December, taking profits at key horizontals in order to buy back a little lower, might be the way that you accumulate the most crypto and or dollars during this time from here to December. During this time, you shouldn't be looking for home freaking runs. And during this time, altcoins probably are going to suck versus Bitcoin. I mean, really, even Ethereum could suck versus Bitcoin. I just think Bitcoin's going to be the thing right now. During this, I really anticipate it. Now, there might be that one-off altcoin. I mean, hell, it could be Doge that really starts performing, honestly. If there's one altcoin that, even though I don't like that it's Doge, but it's better than BitConnect, so I'm not going to complain. And it is a real form of money. It's not just a meme coin anymore. I think the community has made it real. Like, it's freaking legit, so... But it's inflationary, and I don't like that. But anyway, there will only be during this time a few one-off alts. So I don't think that looking to during downturns, like a quick scare down with the confidence that it's just going to be choppy and then take off. So buying here, buying here, buying here, and selling here, selling here, selling here. I don't think accumulating altcoins during these downturns is going to be the thing. I think it would be more likely that you might want to try trading Bitcoin or something that moves with Bitcoin, kind of like Bitcoin Cash or a monetary coin. Monetary coin being defined specifically as it is not a blockchain company. It is a form of money only. Ethereum's a blockchain company. That might be the only exception. So, I mean, even Monero is a monetary coin. It's a privacy monetary coin, but it's a form of money. It's a monetary coin. Polkadot is a blockchain company. Phantom is a blockchain company. Veracity is a blockchain company. Bpro is a blockchain company. So, buying those types of things here, I think it is less probable that you'll do well for yourself if you only try to hit singles or, chip away at the block, not go for crazy gains during this time. Rather, trade something that trades very similar to Bitcoin, only concentrate on one or two items, and then once Bitcoin starts getting confident and consolidating under this area, that's when you might want to move back into altcoins. Perhaps around the new year, if this ends up playing out, which honestly it looks like it's going to. I think it's extremely probable that that's what plays out at this time. So, instead of a choppy range that goes straight up and down like this, similar to almost like how Cardano was moving, Cardano was it had a pretty flat range. Well, one of the flattest ranges I saw actually was Tone. So as opposed to a easy to play range that Tone had, where was it? Here. So Tone had like the ridiculously easiest range. It was a perfectly horizontal range. It was so easy to sell high and buy low. I don't think that's the choppiness that we're going to see. I think Bitcoins will be that, but inverted up a little bit. It'll be angled up. So in a stair-steppy fashion. So during this time, before the new year, what could be most beneficial to increase your crypto portfolio as much as possible is, as opposed to getting into alts, let's say here, something like, instead of getting into accumulating alts here, 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 and trying to sell alts here, here, and here, it could be best just to sell Bitcoin here, buy Bitcoin back, sell Bitcoin here, buy Bitcoin back, and then move into alts once you see this consolidation around or just under the previous highs, is what I'm saying. Now, I've been saying this to my Patreon community for like over a month now, I think. Several weeks. So it's okay if I release this to y'all. But this is just very general concepts. I think you're better off in just, for example, straight up Bitcoin or straight up Monero or some monetary coin during this time. Because as Bitcoin is doing this, your altcoins might not. On average, altcoins might stay pretty suppressed. I think Bitcoin dominance is going to rise, which means on average, Bitcoin on average will make better gains than the average alt, right? So, and if you choose an alt that just so happens not to have a nice range like this, that, like, let's just like say, I don't want to pick on BPRO because I like BPRO. I would like to try to start accumulating it. So actually, this is a perfect example. Even though I like BPRO and I want to accumulate it, I think I will have more BPRO if I choose not to accumulate BPRO during this time in the circle. If I choose to accumulate something like Bitcoin instead here, and then move into BPRO, something like that here, I think I would have more BPRO if I chose Bitcoin, 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 then altcoin. I think you'll have more altcoins in that scenario. So, in summary, you have actual darn good reasons to have some hopium. However, this recovery, it looks like it won't be quite immediate. And if it does start looking like it is immediate, that means it scared the dog and bad things will happen. So I think that in order to recover, if we can go back to the week, I think we have to spend some time gaining the dog's trust. And honestly, the way I wrote it, scribbled that actually would be great. Look, that means the 10 starts curling up. Exactly. And then you really play with the puppy there, just like that's when it turns on its back, and then you can wrestle with it or whatever. You can't wrestle. So if you're a small dog person, that doesn't make sense. But if you have like a German Shepherd or a Mastiff, it's fun wrestling with big dogs. Anyway, it's really fun. But yeah, I mean, this stair-steppy stuff would align pretty well with approaching and gaining confidence in this weekly 10. So that's all I got for you. So you might not want to move into alts immediately. You might want to consider being nimble between Tether and Bitcoin, or Tether and Monero, or whatever, or even Cardano, or Tether and Cardano, trading only Cardano. Cardano's graph looks pretty good. Hopefully it doesn't make a downturn as Bitcoin goes up. I think you're running that risk, but something like that. It could be a top 10 coin or a monetary coin in the top 100, something like that. I think you're better off doing that until the new year, and then moving to alts around then is essentially a summary of this video. And also, one thing to watch out for is if Bitcoin screams past this weekly 10. If it screams past the weekly 10 here, that is not a good thing. So don't forget that. That's very likely to be a trap. And so if you like what you saw, go ahead and subscribe. If you did subscribe because you're new, let me know in the comment section whether you want to be a cryptillion or a crypto crackhead. And y'all just got typified.